To Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Tracking the forex market together, part 1, on August 12 between 9 and 9:45 GMT. We will track the market using the live market code page. I've given the link for the same. You can view the live market code page. Euro is currently trading around 1.4233, 1.4235, 1.4150 is the low, 1.4256 is the high. 10 pips negative net change is seen. In the case of GBP, 33 pips negative net change is seen. So it is trading around 1.6268, 1.6272, 1.6168 is the low, 1.6275 is the high, and Euro is showing negative net change and GBP is showing positive net change. We can understand that it is a contrarian move. Because of that, Euro GBP has made the drop of 23 pips and currently trading around 0.8743, 0.8746, 0.8743 is the low, 0.8778 is the high. So from the high it has made the drop and now currently showing from that of yesterday's close level 24 pips negative net change. So now you find a contrarian move because it is a mid-session, mid-European session, and you find that yen is simply holding around that of 76.70, 76.73, 76.61 is the low, 76.77 is the high, 12 pips negative net change is seen. So along with that of Euro, USD yen is showing negative net change, which is a contrarian move. Because of that, Euro yen is showing 26 pips negative net change, and GBP yen is showing about 4 pips negative net change. And the whole focus is now in the market pertaining to that of USD CHF and also CHF crosses. So USD CHF is trading around 0.7729, 0.7732, 0.7550 is the low, 7766 is the high, 119 pips positive net change is seen. When all others are showing just less than about 30 pips positive or negative net change, CHF is showing about 119 pips positive net change. And in the case of the commodity pairs, USD CAD is trading around 98.70, 98.74, 98.36 is the low, 99.15 is the high, 31 pips positive net change is seen. So when USD CAD is showing positive net change, we know that it is a USD gaining move. Similarly, in the case of Australian dollar, is trading around 1.0316, 1.0319, and the low was 1.0247, the high was 1.0355, and 34 pips negative net change is seen. So when USD CAD and Australian dollar are showing the USD gaining move, and also Euro is showing nominal USD gaining move, and GBP is showing USD weakening move, Yen is showing USD weakening move, and CHF is showing USD gaining move. A mixed reaction is seen in the market, but the entire focus is on CHF now. And you know that on Wednesday there was a very big drop in the case of USD CHF, and then subsequently the rise, and also you come across Friday further rise in the case of USD Yen, so USD CHF. So what they had done is a downward stop, and in the name of SNB they were able to gain the levels, and also you come across in the case of the Euro CHF cross and GBP CHF cross, they have made substantial gains. So after gaining all these levels, what they are supposed to do. So now how to track the market using the live market code page, I'll explain it. Let me focus it over that of the PowerPoint presentation. First of all, before tracking the market, we need to understand the timings followed by that of the players. We can call it as any session, either Japanese or the Asian session or whatever the name you want, or session 1, session 2, session 3. But for convenient purpose, I just given the name as Japanese session. So this session is 0030 to 7 GMT, and there is a gap time of 30 minutes between the Japanese and the European session, that is between 7 and 7:30 GMT. And during the gap time, they make normally the false moves, and that move opposite of it could be seen during that of the early part of the session, the first 30 minutes of the following session. European session starts by 7:30 GMT and ends by 13 GMT during the daylight saving time system, and there is a gap time between the European and the US, that is between 13 and 13:30 GMT. 13:30 GMT to 20:30 GMT is a US session, followed by that 4 hours of gap from 20:30 to 0030 GMT the next day. So this is the timing followed by that of the players, and if you note down these timings and track the market using the live market code page, you will be able to find that the first 30 minutes of the session and the last 30 minutes of the session, you will come across very good activity happening in the market, and we can choose it to trade in majors. And during that of the mid session, in between the start and the close time, you will come across the mid sessions, and during mid sessions, they will be handling the crosses. So you will be able to understand that also by referring to that of the crosses. So you understand that the players during the early session and the late session handle the majors, and during mid session they handle the crosses. Then it is easy for us to use the time frame to track the respective majors or the crosses from time to time or between session or during each of the sessions. So this way, if you try to track it, it is easy for us to try to take a position and exit within the same session without any difficulty. So I'm going to demonstrate to you how exactly these timings can be used effectively to take positions and also exit out of the positions with profit. So what are the factors to be considered in my trading system? So this is a brief outline of my trading system. I have given it already in the form of a series of webinars. My trading system in fxtrade.net, you'll be able to see under my profile, those webinars are being listed, and those who are coming to that webinar for the first time can listen to those webinars which are given under my profile and then understand my trading system. Then you can probably follow it using this particular sequence of steps. So for tracking the market, we use GMT time. So the timing of the market is very important, as I explained with the help of the previous slide. So if you use the GMT time, then it is easy for us to track the 24 hours market. Other markets, probably they are all local markets like stock markets, and also to a certain extent the commodity markets. Then you can use the local time, whereas forex market is concerned, it is better to use the GMT time so that you'll be able to track the market, which session is happening. Even though you are in Asia or even though you are in Europe, you'll be trading the market during the other sessions also. Then if you want to track it as a continuation of the market, GMT time is very ideal, because the players also use GMT time to handle the markets. Then you have to identify the sessions. First of all, the gap time between the sessions and also the session start time. The first 1 hour and 30 minutes is the start of the session, and the last 1.5 hours is the close of the session. In between the time will be the mid session. So I have shown the earlier slide that 0030 to 7 GMT, and in that first 1.5 hours will be the early session. Then the last 1.5 hours will be the late session. Now we are in the European session. So 7:30 the session starts, up to 9 GMT is the early session. Then last 1.5 hours, so that is from 11:30 GMT onwards up to 13 GMT will be the late session. So during the early session, if you try to take positions in the majors, you'll be able to easily book profit within the session. And if you try to take the positions with regard to the crosses in the mid sessions, then it is better to close during the next mid session that particular cross trade, so that you will be able to really book profit when you focus on the majors and the crosses. Then use the live market code page, what I have given it as a link in the hotcom window. The same can be used. You can save it in a favorite and you try to use it for our trading purpose. Then in the live market code page, you come across first of all the bid, and followed by that the ask. Then you find low and high set for the day. So normally each session you find the low and the high may be likely altered or may not be altered. Today, for example, let me go back to that of the live market quote page. I focus the camera now on live market quote page. You can see that low is 1.4150, the high is 1.4256. So there is a spread of almost about 100 pips between the low and the high. So the high was set during that of the early Japanese session. Still they are not breached it, but they have come closer to that. Now euro has become positive net change. So the bid current levels are shown in the bid and the ask. This is the level we can take a sell position. This is the level we can take a buy position. So there is a spread between that. That becomes the commission for that of the player, commission for that of the brokers. Then you find the low and the high, and this particular high, after formed during that of the Japanese session, still not been breached. Earlier there was a low which was 1.4201, and that was breached and formed 1.4150 as the new low during that of the European session. But afterwards, during the early European session, market moved up and gone above that of 1.4201, and then it has gone to 1.4239 now, and 1.4256 is the high. Similarly, in the case of GBP, 1.6168 was the low, but they breached the high 1.6232, and then they have gone up to 1.6289. So you will be able to understand from sessions to session, either they breach the high or they breach the low. So that is how you will be able to easily make a note of each session lows and the highs and refer to that of the next session where exactly they have taken the market. And to know what is the current situation of the market from that of the previous day, you come across the net change. From that of US session close, now euro is only 4 pips negative, and GBP is about 41 pips positive net change. So from that of yesterday's close, it has gained about 41 pips. And in the case of USD yen, it has gained about 13 pips from that of yesterday US session close. After 2030 GMT, whatever the level is being found, that is considered as the closed level, and the last 30 minutes of the trade is being taken into consideration, and the average of it is considered as a closed level, and that is being used to charge the margin and also overnight interest, and then subsequently the next stage start from there. After the gap time, then you come across the new day comes in from 0030 GMT and the start of the Japanese session, and you find the net change is being shown from that particular time. Between 2:30 and 3:30 GMT, they set the initial highs and the lows, and subsequently they either breach the high and go above or breach the low and go below. So how exactly such events or situations can be understood? I'll go back to that of the PowerPoint presentation. So they set the high and the low net change, and these levels can be used for our comparison and then understand what could be the possible move they could make next. So that is the most important thing for the intraday, because are they going to rise? There are only two possible ways. Are they going to rise from that of the current level so that you can do a buy and sell trade, or they're going to drop the market from the current level so that we can do a sell and buy trade? That sort of decision can be taken only by referring to that of the highs and the lows set for the day, and it is easy for us to spot it. So once you identify what is going to be the next move, then we can find our trading becomes very easy. Still, our reading can go wrong. So in that scenario, we try to use the hedging or the stop to limit the risk. So identify the currency pair which has made more than 40 to 50 pips spread. Then the current levels, whether closer to low or closer to high, avoid taking position when it is in the middle level. So now if I refer to that of the Euro and GBP, I'll go back to that of the PowerPoint presentation. Live market quote page. Now you find that Euro is closer to that of the high, and the time is 9:16 GMT. So up to 9 GMT is the early session. During the early session, they are not breached the high, but in the case of GBP, they breached the high. In the case of Euro, they are not breached it. And you know that mid-session, after 9, they handle the crosses. So why they gain the levels in the case of GBP and not in the case of Euro that much? Because they want to drop Euro GBP. So already Euro GBP has come to that low 87.40. So after the drop, it is not advisable to sell. But if you identify that they wanted to drop by quickly gaining the levels in the case of GBP by around 9 GMT or 8:30 GMT, then we could have taken a sell position. But now it has already made the drop. A small pullback, we can take a sell position. Now Euro has come closer to that of the high, still not breached the high. So let us watch how far they want to gain the levels. Then once they stop gaining the levels for about 10 to 30 minutes around that of the high, they can come up to that of the high and drop it. Then it is referred as a false move. They may breach the high and hit the stops and come down in less than 30 minutes. That is referred as stop hunt. And in case if they breach the high and stay above, like in the case of GBP, for more than 30 minutes, then we have to wait for 2 hours and take a sell position. GBP is a typical example today that it has breached the initial high and stayed above that of the high, and also the recent high it has breached and just it is staying above. That means what? For why we have to wait for 2 hours? Every 30 minutes they will try to breach the high. Every 30 minutes they will breach the high. That they will do it for 3 times. So they have done it for the second time. The third time they could make one more. And if you measure what is the pip range they just used to cut the initial high, if you refer it, it was about 30 pips. So they can gain up to 90 pips from that of the low 62.30 to 62.60, then 62.90. Then you may come across the psychological level 63. If there are stops above that, they will try to hit the stops and stop cutting that particular high from after that 2 hours time frame. Then we can take a sell position there because that is referred as an extended move. They quickly gain the level in a matter of about 1.5 hours and start distributing their positions. So why they quickly gain the level? They do not want to buy at a higher level, a large quantity. Instead, they wanted to buy a lesser quantity. After gaining the levels, they wanted to distribute more quantity of positions, what they have accumulated at the lower level. So this is the scenario you come across. And in the case of majors, they handle it so that in such a way, like a contrarian move, they will be able to handle the respective crosses, like Euro GBP, Euro CHF, all those crosses, Yen crosses, they are able to do it by making moves in the case of the majors. So they are now come to that level of 62.89. So probably 63.10 or 63.15, the third 30 pips gain, we can take a sell position. So we have to necessarily wait for 2 hours in that case when they make an extended move above that of the high. In the case of Euro, they are not still breached the high. Let me go back to that of the slide again. Then entry. Within a session, we can buy near that of the low or sell near that of the high when the low or the high are not breached in 30 minutes of our watching. When from the start of the session or close of the session. So start of the session will be very ideal. 30 minutes from the start of the session, they are not breached the high in the case of Euro, but they are breached the high in the case of GBP. So in the case of GBP, we will wait for 2 hours. That means from that of 8 to 10 GMT, 2 hours. After 10 GMT, we can take a sell position around 1.63. So we can estimate it based on the first gain, 30 pips. So up to 90 pips they could gain. So calculate the 90 pips and try to keep a sell limit order. So I will show you how exactly I am going to keep it and see what is going to happen and explain to you what was the fate of those trades. Then exit. Similar to that of entry, exit is also equally important. Many other people try to calculate the entry point, but they fail to exit. When they see the trending is good, they simply leave the trade as such. Suddenly, the session change comes and or a breakout news comes and they get caught vulnerably in the market. So exit also has to be predetermined. And once you determine the exit, then it is easy for you to book profit and re-enter into the market. Otherwise, the holding time will increase with regard to the position. So exit the position with a profit when the going is good near the opposite level set. What is the opposite level? So when you take a sell near that of the high, then your exit point will be closer to that of the low. So I have shown it in the case of euro, 1.4250 level is an entry, then 1.4150 level will be the exit. So that is how we estimate looking at that of the high and the low. Nothing more than that. If the spread is about 70 pips, then that we try to keep the exit point there. And the advantage is you can keep initially the exit point, and if the going is good, when they try to breach the low and come closer to the low, and in less than 30 minutes they don't breach the low, you can close it. If they come to the low and go quickly downward, you can just remove their limit and keep the limit for the downward, or you can make it as a trailing limit if the trailing facility is available with regard to the limit, and also keep stop at entry in the entry position once the position makes about 20-25 pips profit and trail the stop. So a trailing stop and a trailing limit will be there. When the market can quickly drop, then our trailing stop or a trailing limit will be filled and we will be able to maximize the profit. So that is the way to maximize the profit. And if you visually look into it, and you may find that it's going good, and so we'll try to hold the position for some more time. But later on, when the market goes against it, we become spellbound. The best thing is you try to keep stop at entry so that you don't incur any loss when the market reverses suddenly. The second step is trail the stop once the profit is 20-25 pips is seen, so that you can easily exit out of the position, either the stop being filled or the limit being filled, and then subsequently think of another trade. You can do 4-5 trades in a given day. It is not necessary that only a single trade or one single position I will enter and I have to get the maximum profit. And if you want to think of that nature, then you have to plan yourself for a position trade. And as far as taking the positions are concerned, equity determines your risk factor. So if you are holding less than $30,000, it is better to take only one mini lot position at a given time and try to maximize the profit by keeping about near that of the low limit, or if it is a sell and buy trade. If it is a buy and sell trade, then buy near the low and try to keep near that of the high, the sell limit. So that way you will be able to consistently trade rather than take the position in the market as soon as you open the trading platform and later on hold the position for a long time. Nobody is benefited and you only lose the patience, and that may not be a good strategy. Then entry and exit can be fine-tuned by keeping limit orders rather than taking the position at the market straight away. So in the case of euro, for example, if you would have just in an impulsive way taken a sell position, they would have gained another 10 pips, and that would have given you a surprise or give you a bad feel that I could have waited. Instead of repenting that I could have waited, you better forcibly wait and then try to enter into the market. Let them show a higher level, then you try to take. For that, keep the limit order. And still, there's no guarantee after keeping the limit order, they should not go above. But you try to keep the limit order so that you fine tune and you determine your risk by keeping a stop of 30 pips or the hedging order. So, since many of the platforms are offering the hedging positions or hedging facilities, especially in the European platforms, so I will explain to you how exactly the hedging can be handled in this particular webinar. Then avoid impulsive decision of buy during the rise or sell during the drop. This is the scenario come across. Most of the traders do it, and when they suddenly reverse it, they stop it out in no time. And we are not entering into the market to lose money. We are entering into the market to make quick money. And in that particular process, if you are not able to judge why they are rising it, why they are dropping it in a quick way, then it is very difficult to ascertain what sort of trade we can do. So they quickly rise. That means they gain the levels without buying much of a positions, orders placed in the market, and they wanted to exit out of the position of the longs what they have built up. So when they are making a quick rise, then it is better to wait for them to complete the rise and start taking the sell position along with that of the players rather than trying to buy and quickly book profit. In case if you book profit, fine, as a breakout trade, but if you fail, then you will repent that you have taken a higher level buy rather than a lower level buy. So normally when you use your common sense, you will not buy any commodity when it is highly priced. You will try to buy it when the price is cheap. So a similar concept, if you try to use it as a common sense, you will be able to understand that impulsive buying after the rise or impulsive sell after the drop are detrimental for trading. Now in the event, if the market breaches the high or the initial high or the low, what is that we are supposed to do it? So we have to identify whether it is a stop point. That is, go above that of the high and come down in less than 30 minutes. Now, in the case of Euro, they come closer to that of the high, but still they are not breached it. Whether it is a false move. If they go above that of the high and come down in less than 30 minutes, it's a stop point. If they come up to that of the high and drop it, is a false move in 30 minutes time, and then they will go closer to the low in that process. Extended move, what you have seen in the case of GBP, they cut the high and stay above there for more than 30 minutes and try to rise for another 2 hours. Then subsequently, they start making the slide in the next session. Then an intentional move is a slow move. The extended move is a quick move. So extended move, if they rise, that means they are offloading the positions. It is not bullishness of the market. If they quickly drop, it is not bearishness of the market. They drop and buy. So you have to differentiate whether that particular quick move is really to buy by making a quick drop. If you notice it on Tuesday and Wednesday, they made a very quick drop in the case of USD CHF. And people might be thinking that only the safer one is going to exist in the world and the rest of the things are going to be abolished. Probably currency trading may not happen. That is how they created the field. And what happened? They started rising it. So such quick moves are false moves. So you should be able to calmly wait. And if you have taken a buy position already, hedge it and calmly keep stop at entry and wait. Let them drop it anywhere they want. Let them come and close your sell position, the hedge position at stop at entry. Then you will find it starts going up. So there comes the importance of patience. So intentional move is the one which is a slow move. So they slowly drop for about 2 days or drop for about 3 days or at least for 2 sessions. And they are all called intentional move. Then extended move is a one wherein they just quickly gain about 100 to 200 pips and then drop in a matter of about 30 minutes to 1 hour. And you know that in the case of Australian dollar last week, they just gained the level from 1.07 to 1.10. What for? They quickly dropped it. And in the case of Australian dollar again, on Monday, they made a quick drop below that of the parity. This is 0.9929. What happened? Then they slowly gained the level. So quick moves are false moves. You have to understand that is the best way to read the market. Then you will find it is very easy to enter into the market without any fear. So for extended move, wait for 2 hours and then do a counter trade. If they gain the levels, do a sell and buy trade. If they drop the level, do buy and sell trade. And if they are doing an intentional move, wait for 2 sessions. Afterwards, try to take a buy after the drop, or after 2 sessions of rise, take a sell. So if they cut the high or low and stay above the high or below the low for more than 30 minutes, do technical trade also. That is, you can do a buy above that of the high or sell below that of the low. So normal basic trading will be sell near that of the high and buy near that of the high and close it in the opposite side. A technical trade is buy above that of the high. A typical example could be now USD CHF. They set the high and they are staying above that of the high for more than 2 hours to 3 hours to 4 hours. So that means it is an intentional move. They are just trying to gain further levels. Any dip there, you can try to buy. They will gain the levels. So if you have the same fear that like last time they had dropped about 500 pips, they could drop another 500 pips. No, they are not going to do that, because every level when they come up, then people think that, okay, this is the resistance level, we'll try to take a sell. Then they go above and hit the stops and come to the same level and go up again next. So that is how they try to make the moves in the market, that you should be able to identify and try to do the trades without any fear. Now, the forecast, Euro and GBP are expected to make swing and slide moves in this particular session. They are gaining the levels now. So, what sort of trade we can think of? Now, Euro is around at a 1.4259. They just breached the high. 1.4256 was the high. You would have seen it in the live market code. They just made about 5 pips upwards often, and they have come to 1.4256. So, let me keep about 3-4 pips above the sell limit order, because I'm able to read from the entire market move that they are handling the cross Euro GBP. If they want to handle Euro GBP or drop Euro GBP, what they have to do, gain the levels in the case of GBP and not gain much in the case of Euro. So now those who have gone short might go in for a short covering. So this is the high, 1.4256. So now they have come up to 61 and came down. So we can keep it also as 60 or 58 or whatever it is. But to have a definite fill, I am trying to keep 42.56 as the limit. Now currently 42.54 is the level. If it comes above slightly, then I'll keep 30 pips hedging order. Hedging is referred as entry stop in the platforms, because most of the webinars I have been using the stop. This time I wanted to use the hedging and explain how exactly the hedging can be handled. So entry stop of 30 pips. So 30 pips above, we try to keep a buy order. That is what entry stop. So some of the platforms offer the hedging facility wherein you can hold a sell position and a buy position, and they don't offset each other. And if such a situation is seen in our trading platform, you can use the hedging to limit the risk. At any given time, we will only take 30 pips risk. We will not take unlimited risk like not keeping the stop. Because frequently the stop is being filled in most of the trading platforms, whether by the market or by that of the platform providers, many people have developed the tendency of not keeping the stop or keep the stop about 50 pips or 100 pips away and things like that. And in case if the market makes such a big move, the loss will also be unbearable. So instead, you limit the loss so that even if you lose 30 pips, you may not lose your morale. Keep that in mind. So they just quickly made a dip in the case of Euro again after making a brief upward stop. And let us see whether 42.56 they could kill it. In the case of GBP, as I explained, we have to wait for 2 hours. So I'll keep the limit 1.6300, the psychological level, because they have come up to 1.6296. And then let us see whether they will be able to come up and try to take it. The last move might be a lesser move, probably. If they don't come across much of a stop above, then they may not. If it is mainly to handle Euro GBP, then they may not go above 63. In that case, we can modify and sell with an entry stop of 30 pips. So we are only keeping limit order. We are not trying to take the position at market. Then USD CHF is currently trading around 77.26, 77.29. 77.66 is the high, and earlier high was 76. So it is quite far away. They have come to that of the psychological level, and during the session start time, they came down to 0.7709 and 07 level, and again they firmed up. So that is an intermediary level. So we'll try to keep a buy limit order 0.7712 with an entry stop of 30 pips. Why I have decided on 7712? Currently it is trading around 7727, so just about 15 pips below that of the current level. I am trying to keep a buy limit order because market mean swing, they will try to dip 15 pips and then go up. At that time, I'll get a definite fill. And if they drop for the big downward, I don't mind because I got a hedging to limit the risk only to 30 pips. If they continue to drop 500 pips, doesn't matter. I'll close this buy and hold the sell and book. If the market moves 30 pips higher than that, then I will be in the money and I will try to maximize the profit on the downward move. So I'm prepared for either way moves. So when you use the hedging, we really get rid of the fear. And in the case of yen, the spread between the low and the high is just about 39 pips. So we will not take any position there because if it is less than 40 to 50 pips, it is better to avoid taking positions there because we may not be able to close within the session. Ultimately, we are entering into the market in order to make money. So no sentiments to currencies. Then Australian dollar. Currently, it is trading around 1.0343. 1.0355 is the high and 8 pips negative net change is seen. So I will keep exactly on the high 1.0355 with an entry stop of 30 pips. Why? Because they may make a brief upward stop, and as they have done it in the case of euro, GBP they are making extended move, so we are trying to take a chance. See, after making a brief upward stop in the case of euro, they are not gaining again, they are just building sell positions. If you see the code page, you come across very frequently red orders. So that means they simply gain the level and in order to drop it again. Now 40 to 55, 40 to 57 at the current level, now 40 to 56 has come. So this particular sell has become a position. So we fine tune our orders. So if you fine tune our orders, then you'll have a better position and we'll be able to maximize the profit. After taking the position, maximizing profit is one strategy. But we try to enter into the market at the most appropriate higher level. That is another strategy, so that when they drop it, we will be able to maximize really the profit. So taking full advantage of the market moves, because we are able to read the market moves, and as I explained, the stop and then the false move and also the extended move. They have done it extended move in the case of GBP. They have made a brief upward stop and in the case of euro. So we are able to read that. Then we'll be able to really maximize the profit when they start dropping it. The forecast is only a guiding factor. And in the case of Australian dollar, I just kept around that of the high 1.0355 as sell limit. And if they sell it, fine. Otherwise, I'll just take it 10 pips below that. And in the case of Canadian dollar, they are making subdued moves, and the spread is about 60 to 70 pips, and currently trading around 98.55. So we'll keep a buy limit 0.9836, the low set in the live market code page. 30 pips entry stop. So if they come closer to low, fine, we'll take a buy. Otherwise, if it's not filled, we are not worried. Then in the case of yen, we found that there's not much of an activity. So in the case of euro yen and GBP yen, the moves will be very similar to that of euro and GBP. Since we are focusing on euro and GBP, we will simply ignore euro yen and GBP yen. Because if USD yen is also making very big moves, then you will come across more advantage of taking positions in euro yen and GBP yen and maximize the profit like 150, 200 pips. Otherwise, if euro drops 50 pips, we will come across euro yen also drops about 50 pips. So instead, we can straight away take position in Euro. That is how we should be able to judge. Then Euro GBP, they have already made that drop. It is closer to the low. And if you watch the live market code page, 87.41 has become the low, and market is trading around 87.45. The high is 87.78, about 30 pips above. So there is no point in taking a position when the market is near the low, because they have gained the levels in the case of GBP and not gained the level much in the case of Euro. So it is difficult for us to do a buy and sell trade in the case of Euro GBP. So we will avoid it. Euro CHF, it is trading around 1.1017, 1.1046 as the high. And since they are handling Euro CHF, and they gained about 179 pips, and they are expected to gain further level. The first psychological level is 1.10. So currently trading around 1.1019. So we'll keep a buy limit order. $1.100 or 1. So that we'll get a definite fill, and we will keep entry stop of 50 pips. In the case of the crosses, there will be very quick moves. So it is better to keep 50 pips entry stop rather than just 30 pips, because the volume is less in the case of crosses. So relatively you will come across more big moves happening in the market. So it is better to keep entry stop or stop 50 pips in the case of cross. So we avoided taking positions in the case of yen crosses, because yen is not making very effective move, less than 40 pips. And in the case of Euro GBP, already they have made the drop, but it is too late to enter into the market. Next pullback, next session, we'll try to take a sell. And Euro CHF, they have just gained the levels throughout the day. And now Euro is in positive net change, and USD CHF is in positive net change. It is a confirmation move. So they intend to make further rise by making further rise in the case of Euro CHF, because if you see, Euro is making about 6 pips positive net change, and USD CHF is making about 121 pips positive net change. And you know the daily limit is 200 pips in the case of USD CHF. So yesterday they breached those 200 levels because of extraordinary conditions. Otherwise, normally 200 pips they will gain. So when they make a small dip, we'll try to take a buy in the case of Euro CHF. And then subsequently, when they gain, we'll try to keep stop at entry and trail the stop and keep a limit of 200 pips net change level, and see whether the trailing stop or the limit they are trying to close it. So determining the exit is, we can use the net change as well. Suppose if they are dropping Euro, and you know that net permissible level on a given day, normal day, is 150 pips. So if you come across the market has dropped about net change of 100 pips, further 50 pips downward potency is still there. So you can avoid taking a buy position too early. So you can wait for the further drop and then try to take a buy position, so that you'll be able to easily hold the buy position without much of a risk. See, after filling the zero, they are simply making the drop, and wait for that. And GBP, they are not given the definite fill, and 1.6296 is still the high. If the high is not being breached for more than 30 minutes, so whatever the high they have formed, that means they have finished the 2 hours time frame. Now it is already 9:46. So small gain, probably 90 to 90, will take a sell position. So I'll save it. And once the positions are filled, I have only kept limit order, only Euro position is filled, rest are not filled, and we will review it again by 14 GMT. Before that, I'll just minimize the PowerPoint presentation, focus the camera over that of the live market code page, and take up the questions which are asked here. Okay. Written. New York open time and US open time, both are same. I think half difference between two. Please explain. See, what you conventionally use as the time is not being used by the other players. That's what I can say. I don't know the reasons for that, but the players do it when the local time is 9:30, the banks start making the currency conversions for that of their exporters and importers. Before that, they try to use a time wherein the banks in the previous regions close for the day, and the rest of the transaction they give the effective day for the next day. And the banks in other country opens after 30 minutes. That gap time, the players use a specific type of order called all or none order and try to hit the stops. That is why the gap times become important. Then Rupal. What do you think about euro? They dropped earlier to gain to 44. No, they are making small swings in order to just handle the crosses. So euro gained nominally, GBP gained big in order to handle euro GBP. Again, euro GBP, they will just hold around and gain about 10-20 pips and make that drop during the next session. For that, they just use it as strings. The majors are used as strings in order to move the crosses. Then Rupal, do you think euro will drop now from where? Yeah, as I explained many times in the blog and also in the webinar this week, that they are doing now the multi-year trend reversal moves in the case of the denominator currencies, the USDN and the USD-CHF. Now, USD-CHF after a very big fall to 0.71, it has gained to 77 level. And they are expected to further gain and bring it to the parity before end of September. That is what estimated, and it can vary. Don't blame me afterwards. This is my estimate. And similarly, yen is currently trading around 76 level. They are expected to pull it up to the higher level, and we can see before end of September trading yen is coming back to that of the normal level above 100. So you might be thinking about $26 or $25 it has to gain. But you know that Australian dollar, they gained from 1.07 to 1.10300 pips and dropped in one go, just a matter of 2 days to below parity. So always gaining the levels takes longer time and dropping just takes a lesser time. Keep it in mind. And here it's a question of straight accumulation in the case of the denominator currencies like USD-Yen and USD-CHF. Canadian dollar was used, the Canadian dollar, they made the multi-year trend reversals along with that of euro and GBP in 2008. And euro went up to 1.60, GBP went up to 2.11. At that time, Canadian dollar came down to 0.90. So those things are over. That is why Canadian dollar this time they are not touched much, and it is only trading below parity. And whereas the other three currencies, namely USD-Yen, USD-CHF, and Australian dollar, they are taking it for the multi-year moves in 2011 now, and now this is the time for them to reverse it in August and September. They are expected to bring the market to that of the normal level. So, as I explained in the Monday webinar, Asian Session Live Market Analysis, we'll come across by end of September all the currencies trading in the normal levels what we have seen in 2002, 2003. That's what I can say. Beyond that, I cannot explain it now. Based on my algorithmic study that has been estimated. So euro is going to be in the range of 1.39 to 1.45 during this particular process. And also GBP will be in the range of 1.59 to 1.65 in this month and next month. Then AAA, how you choose to sell or a buy? That's what I explained. Near that of the high, we can take a sell when the high has not been breached for more than 30 minutes. Near that of the low, we can take a buy when the low has not been breached for more than 30 minutes. Because we are only intraday traders, so if you use the long-term charts, then long-term will show the bearish and short-term may show bullish. So we get confused whether we have to do a buy and sell trade or a sell and buy trade. Then we go in for the lot of other type of analysis in order to confirm what sort of trade we can do it. But when they sustain near that of the high, not breach the high, understand they are sellers. So simply sell along with them. When they are near the low, not breach the low for more than 30 minutes, they are buyers. So buy along with them and just quickly book profit during the rise. So that if you try to do it intraday, you will be able to slowly build a swing and build your equity by doing more frequent swing trades. Then how are you determining the levels, Rajesh? I explained it near the high and near the low only we enter. When the market is in the middle level, we don't enter into the market at all. For example, USD CAD is in the middle level, so we don't take any position. When it is come closer to high, about 5-10 pips closer to high, then we can take a position. Why? We wait for such things so that they don't sustain either at the high or the low for a long time. Can you please give session times again? Sorry, again by 14 GMT, I'll be doing part 2 of the webinar. At that time, you can see that session times are being displayed, and definitely if you ask questions, I'll be able to answer. If buy limit USD CHF hit is 77.12, how do you determine whether to take where to take profit? So I said net change level in a given day, net permissible level is 200 pips in USD and also USD yen. So they gained only 100 pips. Now, so there is a potential of 100 pips gain is seen. Hope you are able to understand how the exit is being determined. Statistically, you can calculate and fine tune your entry also and exit also. No harm in it. So let me go back to that other PowerPoint presentation. No more questions. These are all the positions what I have taken. Only one euro position is filled. Still GBP is not filled. I'll just watch for another 10 minutes and fine tune and try to take a sell position once we stop breaching the high for more than 30 minutes in my observation, because almost 2 hours is over. Next pullback I'll try to take a sell. And in the case of CHF, still it is not filled and it is closer. They are making a small dip. And Australian dollar also, they are not making a rise, so I'll try to modify, and the net change is still negative. I'll try to take a sell position after modifying it. Canadian dollar is also not filled. It is the middle level. Then similarly, Euro CHF, if they make it drop, then I'll take a buy. Otherwise, next session, already they have filled it, Euro CHF. It has become a position. So these are all the positions. I'll explain what the fate of these positions during my part 2 of Tracking the Forex Market Together webinar. See, the basic idea is I wanted to give a very simple methodology for small traders to understand how exactly we can read the market and try to earn money out of that. And you can use other type of analysis as well to confirm it. In the other type of analysis, you try to determine whether to do a sell and buy trade or a buy and sell trade. And so this forecast and also your market reading could help you in determining whether you can do a sell and buy trade or a buy and sell trade at a given time. So I'll come back by your session 14 GMT and take the part 2 of the webinar and explain what happened to the highs and the lows which are seen during that of the European session and the fate of those trades taken. And I also take positions for the US session seen during that of the part 2. Thank you.